Rishaad, Darby, Global Head of Equity Strategy at Jefferies Group Inc here in Hong Kong. Now, I should point out also that, you know, the HSBC numbers for the first time in a long, long time is actually higher than the official government PMI figures. What does that say?
Well, I think there could be some statistical variances as on a month-to-month basis, but generally, so far, the data hasn't actually picked up any slowdown in the Eurozone, which is actually quite good news, really, for Asian exporters. But I suspect that you know, these numbers are probably going to still be pointing towards more negative numbers going into the end of the year. Already a lot of the shipment data from Asia is already showing us signs of slowdown, particularly things like air cargo.
This is the export side, basically, what we're talking about here. That's where we're getting a hit, and we're already seeing more and more evidence, anecdotally, of a slowdown globally. Yeah,
the earnings numbers that have come out in Q3 is so far, the guidance has actually been quite optimistic, but I think already the shipment side of things is slowing down, and I guess what's going to happen is that a lot of that's going to just move into inventory in warehouses in the US and in Europe. And as I said, from Q1 next year, it's going to be quite difficult data for countries like China and the rest of the region.
Yeah, we were talking about that earlier with Stephen Engel with the preview of these PMI numbers, thinking how can we have a third consecutive month of manufacturing growth when we have a global slowdown taking place, also a slowdown in the Chinese economy, and then exports are looking weak as well, considering there's all these headwinds that we're facing around the world.
One of the difficulties for Asia is that there's a lot of just-in-time inventory management, so we don't always see the slowdown coming. So unfortunately for a lot of the manufacturers, they'll be maybe shipping goods now, but it will just go into, as I say, go into the warehouses, not be moved over the next quarter or so, particularly, as I said, with the Christmas season already pretty much being past us now.
Yeah, we want to talk to you a little bit about Europe as well. I mean, you know, this is what equity markets and equity investors are focused in right now. And another false dawn?
I think so. I think it's very
be optimistic. Come on, Sean.
I think for equity investors, they can see a lot of value in their asset class. The problem is that volatility is still going to go up now. And I think there's generally a view being accepted that it's not just going to be about a Greek haircut. There's still an awful lot of entrenched problems in the Eurozone, and the politicians didn't really get very much done coming into the G20 meeting.
And mudding the waters further is George Papandreou possibly having a referendum on this. And, you know, is it going to get anywhere past the Greek people?
Well, the key problem here is that even with the 50% haircut, the debt to GDP by 2020 is going to still be 180%, and that's still going to entail a huge amount of austerity going through the economy over the next 18 to 24 months. So politically, these programs that are being put in place are dynamite for incumbent governments. So I think it's, you know, we've got to take the view that one of these countries is going to find it incredibly difficult to pass these resolutions, either to bailing out the EFSF or indeed in putting in place the austerity programs.
They all seem to want to have one, don't they? Now, we've got Singapore Air, just had that breaking news before the break, 777s, low-cost carrier called Scoot. Imaginatively named, I suppose.
I think these all are essentially proxies on rising income per capita, particularly in the Asian region, and I think they're trying to capture that class of people that are just starting to move overseas, particularly in China.
Well, that's the whole Air Asia strapline, isn't it? Now everyone can fly. Not quite, but yeah.
And I guess part of it also, if you look at some of the business models for the airlines, is that air cargo has also started to take a large proportion of their earnings. So again, if you can't fill the seat, you may be able to fill the belly of the plane with couriered goods or other items. So it is generally essentially play on the rising GDP of the region. And I think, as I said, these business models will probably only be catering for the sort of lower income groups.
Yeah. Okay. Well, let's get back to what we were talking about before, and that, of course, is Europe and how it's been affecting things, and the Chinese being, of course, courted by various people in Europe. But they're not just going to buy bits of paper, are they? I think they want something more material. They want something which is going to be net cash positive and give them good cash flow.
Well, there's a bit of an irony, which is if China continues to buy into Eurozone, it's going to send the euro even stronger, which is going to actually make a lot of European industries uncompetitive. I think the two things that quid pro quo for China is, one is certainly trade-related issues, and secondly, of course, is some ability to access some of the privatizations and sell-off of state assets that's going to go through in Eurozone over the next 12 months. They've been largely prevented from doing that in the US and Europe. And I guess for them, it'd be better to be owning equity stakes in companies, not necessarily now a lot of the government bonds.
Richest 2-mile handicap race in the world in 35 minutes from now. Melbourne Cup, You got a American is favourite. I'm just going to ask you what your view is here. You just,
I don't really have it. All it's to say is that horse prices, I think, have actually held up very well globally over the last 2 years. So it's probably been a better relative performance than equity markets. But yeah, so if you've been in the right area, in the horse blood stock area, you've done very well in the last 24 months.
so Newmarket, you've been hanging around there, have you?
Not recently, no. But as I said, you can look at some of the prices of bloodstock, and it's done very well.
Okay, which brings us nicely to talk about, alternative investments away from equities. Well, what have you been seeing there? Because, we've seen how the Hong Kong wine market's gone crazy, the art market's gone nuts as well, and you're saying even, horse prices are also doing well.
Well, there's still a tremendous feeling out there that scarcity is going to get bid up globally, with real rates still negative in the US and UK and in China. That's still the predominant theme. Antique prices have held up globally as well. So I don't think it's going to go away, those type of investment themes. I think, unfortunately, some of them have acted a bit like have absorbed a bit of a bubble. Wine has been a good example. Prices of Lafite have come off. Yeah. But generally, there's still this underlying theme is to buy into scarcity.
Sean, pleasure seeing you as ever. Sean, Darby.